Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, July 31st, 2020. So as we head into the final hours of the trading month here, we're about to close out July. Wanted to do a quick update. I won't spend too much time on the broad markets because I did an update this morning on QQQ and the FAANG stocks and the tech sector, but I did want to reiterate the importance there, or at least what I think is the importance of that sector and what's going on. Sometimes price moves don't tell the entire story. It was a big pop today. As to be expected, even I mentioned yesterday, Apple, Amazon, these companies are earnings juggernauts. There's no doubt about that. They've obviously they're profit machines, and so another record quarter, big blowout earnings. But more important, as I've been saying for a long time, and as I say every quarter, every time you have big earnings, it's not the initial reaction. It's not what a company says or reports. It's how the market reacts afterwards. So we're going to continue to monitor that. One day doesn't make a trend, but here's what we have so far. The Qs are up right now as I'm doing the video, and they've been up most of the day. They actually did go negative slightly. So when you look at the chart here, this is a daily chart. Here's our uptrend line. We're holding that support so far. We're holding that what I think to be an important reaction low from Tuesday, July 14th. It was the day after that bearish engulfing candle. We never did really get any confirmation on that with follow through to the downside, nor did we ever take it out. We came up near the top of that candle, failed to take it out. So we're kind of we're trading sideways now, going back. If you look really box in this range, it goes back for almost a month here now in the Qs. And now up is up. I'm going to give it that, but again, when you lift up the hood and you look at everything, sometimes price doesn't tell the whole story. So let's look at what happened today so far. This is a 1-minute chart. So I zoom in here and you can see the daybreak line. Pretty much what they've done is they faded all the rally, at least at one point today. This is yesterday's close right here. I have the after hours trades turned off just for simplicity here. Three of the four FAANGs that reported went up last night. Alphabet fell, but Apple, Amazon, and Facebook all rallied, and so you had that euphoric pop. And then you can see a pretty hard fade. They faded that. This is open here by about 10:30, less than an hour into trading. They faded nearly all the gap. Dip buyer stepped in again, once again faded the entire gap right there. And this yellow line that shows yesterday's close, we even went negative, and so far that's been the trend. The buyers, the buying is getting faded into. Now, again, we're up, so you can't write it off as being bearish, but that is a little bit of a, hey, what's going on? In other words, they're selling, buy the rumor, sell the news kind of thing as far as earnings go. And again, we're not going to have complete resolution of or an idea of where we're going until next week, because we're going to, as it is now, we're almost flat. Let's just call it flat. Now, as I mentioned earlier, under the hood, things aren't quite as well. You have QQQE. If you put an E at the end of QQQ, this is an ETF that tracks the equal weighted NASDAQ 100. Same basket 100 stocks, but they give each one an equal weighting. So what they're doing is really stripping out that impact that Apple, Amazon, Facebook have on the index, because they have such a huge weighting in it, being it's a market cap index weighted market cap weighted index is what I mean to say. So there it is. And the same story. You can see where we're at right now. If we zoom in here a little bit, the equal weighted Qs are trading at the same level they were back here. Again, this is just like on QQQ about 25, 26 days ago. It's almost a month ago there. That's it. So we're not going down, but we're not going up. You can spin that any way you want it. You can say, well, the trend is bullish, and the fact they can't pull it down is bullish. Yeah, I'll give it that unless they go down. But I'm not the the news here. I don't CNBC or Wall Street Journal or even the CBS Evening News. They report every day what the stock market did, and that does good. It's not going to tell you any good to say, hey, the Dow dropped 300 points today because. So we use technical analysis to try to predict where we're going, and by every just about all metrics I have, it says we're that long overdue correction is coming. It looks like it's priced in. Went over this before. The earnings is often the catalyst for inflection points in the market, whether you've been in a downtrend for a while or whether you've been in an extended uptrend. Very often those catalysts come when mainly these big FAANGs report, and that was the case certainly back here in late January. So That's it. And finally, last but not least, let me just show you what I mentioned this morning, and I can show you how I come up with those numbers. If you're new to the site, I've shared this before. This is something I came up with years ago to give me real-time market breadth. Most breadth indicators, first of all, you're only going to get, like the NYSE, you can get the NASDAQ composite breadth, but I can look at any index, even a sector, and just pull up the ETF for the sector itself, get all the components here, and then all I do is sort by the percentage change. So that tells me right now, as I'm doing this video, it is 1:18 p.m. Eastern Time. We have the Qs are up 0.13 or 0.15%, so they're up. And yet, out of the 100 stocks in there, you have, if I click on that, it tells me 19 are up. So 81% of the stocks right now are trading negative, down in the NASDAQ 100. That is very, very poor market breadth, especially for the fact that the index is up. And again, it's not rocket science, it's math. And that's why I showed you the QQQE. So overall, most stocks are down today. And again, that's why I wanted to point out, what can appear to be rosy, green day most of the day on the Qs is not the story of the stock market. The S&P 500 is much more indicative of the U.S. economy and the entire stock market. It's down now 0.63%, also a pretty big fade. Keep in mind that those same FAANGs are top components in the SPY. They just don't have such a heavy weighting. SPY is more balanced between, it has additional sectors and of course 500 companies, but you can see they faded that hard too. And then another way to look at market breadth, if you want to do that, as I mentioned this morning, is you have RSP is the equal weighted S&P 500 index, and you can see it's down quite a bit more. So today is a down day. So there's RSP, well off its highs. In fact, well off the all-time highs right there back in February, as is the S&P 500. And the equal weighted is considerably below that peak high right there back from June 8th. I wanted to point that out. We're about 7%, over 7.5% below that. And then when you look at SPY, it's a little bit different story. See, when you look at the S&P 500, the regular SPY, we're about where we were. So what this shows is deterioration. Everything I've been talking about for weeks, we've been seeing on this advance deterioration in market internals, more and more stocks going down or no longer going up. And the fact that because this is the regular SPY, not the equal weighted, it's looks stronger than the underlying internal, the rest of the stock market is, because of that overweighting in the FAANG stocks there, and some of the the big names as well, not just the FAANGs. You have Tesla, which is now getting up there in market cap, and in Netflix and some of those others. So that's kind of the story of the stock market, if you will. And remember, if you look at the SPY, and I'm not even pulling the equal weighted, just a regular S&P 500, take the weightings as they are, snap where we're at today at the bottom of this red candle right there, or where we're currently trading, and I pull this back and put a horizontal line. We're back to where we were 1.9 months ago. It's in the pop-up box there at the left. So nearly 2 months of the market, it's not going down. Again, you can spin that as bullish, and debate all day long. We'll only know in hindsight, with 3-4 months from now, how this is going to resolve. But you can say, well, the market's holding up. It's internally correcting different sectors, different stocks, or you can say, well, the market refuses to go up anymore. Again, if I didn't have the indicators and we were just looking at price, that's the argument that I'd have to make. I can't make a screamingly bearish argument right now long term yet, because you have a lot of key moving averages and key support level just below. So at this point in time, I'm looking for the pullbacks that I've told you in recent videos of giving you percentage terms and all that. Open to the possibility of much more. I'm very open to that, but at this point in time, I think at the very least we're going to get a decent correction, come back. Let's just say we pull back to the 200-day simple and exponential moving averages, as well as there's some price support down here that you're talking about 7.5%, maybe 8%, we'll call it 7 to 8% on the S&P 500. Okay, and then finally, as I often say, divergences, overbought conditions, deterioration in market internals, all those are not sell signals. They're just conditions. indicators. It's just like a prosecutor trying a defendant. They try to build a case. The more evidence they have, the more solid the case they have, more likely they are to get a conviction. The stock market technical analysis is like that. The more check marks you can add for the bearish case during a bull trend, the higher the probability that you are right. The charts are going to play out for a correction, tradable trend. Likewise, there's certainly some check marks the bulls have going for them, like I talked about. But so ultimately, the levels to watch, although divergences, things like that, are not sell signals. 318.30 I still think is a pretty big near-term level to watch. That's SPY has been holding above that level in recent weeks, and as I mentioned to you earlier today on QQQ, and I've been saying this for weeks now, the level that I want to see taken out to open the door for more downside is the low from August 14th there, the day after that bearish engulfing candle. Of course, a break of this trend line would be an early start, early sell signal, and then a break of that one should seal the deal. Bare bones minimum target. I don't even think that 242 would hold much as a target anymore. I think we get a reaction there, but I'm looking for if that goes based on what's going on in the daily charts, a deeper correction there on QQQ. And remember, XLK, the tech sector, I often say it's the most important sector. It's about half of the Nasdaq 100, and it makes up a full quarter of the S&P 500. So by far the largest sector. And when that goes, that's when the market goes. And we already had a sell signal on it. We had a breakdown, and we're back testing. So that's an objective short entry. It's, as I mentioned this morning, I believe I referred to it as an objective but aggressive short entry. Why? Well, you don't have the Qs breaking down yet. You don't have the market leaders breaking down yet. Microsoft has been pretty soft since the earnings. Amazon, some things there, but they haven't rolled over. A lot of those stocks, majority, are still at or not too far off their all-time highs. So the reason this is objective but yet aggressive is because it would help to see those market leaders break down. In other words, the market, this isn't going down very far without them breaking down. Let me put it that way. So that's what we're looking at. And the other thing about it being objective, because it's a back test, the problem with shorting a back test, sometimes you get a back test, kiss, and it's one and done, and that's it. And then sometimes you back test for a while. And an uptrend line is dynamic, meaning prices come in at higher and higher levels each and every day. So if it back tested this thing for 3 weeks or 3 months for that matter, you're going to be up higher and higher. And then ultimately, you may backtest and then regain the trend line as well. So again, objective, yes. High probability at this point in time, not the highest probability. As I've been saying for a while, maybe just have a starter short position here if you're an aggressive trader, or whatever your mindset is and your outlook on the markets, and then wait for some additional sell signals, everything I've been talking about for a while, those other levels to go, maybe some bearish price actions, bearish candles, things like that, and then you can add. All right, let's move on, changing gears. Well, we'll hit on the FAANGs since I updated them this morning. Apple still above that trend line right now, still a divergent high. Nothing's really changed in the technical posture, although it did take out the previous highs today. But let's see. I'll be very, very curious to see how this one trades over the next week or so. Remember, I covered this morning. Back in late January, they reported on January 28th. On the 29th, the following day, they gapped up just like now. In fact, it looks very similar. I'll turn off all the lines. We have a little, you can see right here, it's a doji candlestick. See it right there? That's the gap up on the day following earnings. Doji going on right there. A doji is an indecision stick, meaning traders are indecisive. You have, stock is pretty much ending up right now. If we close today where we're at now, there's still another 2.5 hours to go. It means that the stock pretty much closed where it opened today. Now look, dojis can come throughout an uptrend, but when you get them like this, you want to see a follow through. If you get a gap down there's a lot of potential bearish candlestick reversals that can come after a doji. But the doji in itself, just like the bearish engulfing candles I mentioned recently, I don't consider them sell signals at all unless they're confirmed with additional candles, bearish candles that support that. So again, just something I'm watching right now. And point I was trying to make is back then we had that doji on the day after earnings, and indecision it was, because the markets traded sideways for all the way for about at that same level, never going higher than the top of that doji right there, all the way to about right there. That was about 22 days, 3 weeks. And then Apple finally started giving up the ghost and continued lower. Yes, COVID was involved. The technicals were in place. COVID was, call it the catalyst or one of the catalysts. The market started rolling over, and then everything else kind of ran its course. But again, it was priced into the charts before it happened. All right, and then finally the other ones, Microsoft has been weak since earnings. It topped out here before earnings, put in a divergent high, and then a couple days later, a bearish engulfing candle. Had a few follow-through candles, never took out the high of that candle. It's been walking lower since, but look at that. Here's that level I've been harping on, 201.35, holding that level like a champ so far. Looking weak, but holding it. You can say what you want about it, but as I like to say, support is support until unless broken. These are all the reactions here. There was a break intraday. We rallied right back to close, just a hair under it, for all intents and purposes, close enough. Another test. These are the fat part, the body. That's where we're at right now. So to me, pretty big level with a trend line just below. And again, a stock that's kind of been sucking wind since earnings, undoubtedly held up to some degree or another from from Apple and Facebook and some of the other things that have held up since then. Let's see, I'm going to go back to QQQ to load my watch list so I can get back to where we were. Amazon, I mentioned this morning on the update that I put on the front page. You have really two levels. You can say what you want about Amazon. It's not too far off the all-time highs, so I'm not going to knock it as super bearish. But I did mention in recent weeks it was one of the more bearish of the FAANG stocks, because you had at that high bearish engulfing candlestick right here. That was followed by a breakdown of the trend line, 4 confirming red candles. But like everything else, the market hasn't broken down, or at least the FAANGs haven't broken down, so this one's been going more sideways than anything. So this is it. We are in I'm going to call it a sideways range, sideways trading range. Technically, it's a near-term downtrend. You have a high there, a lower high. As long as we don't take out that previous high right there today, you have a series of lower lows there. Again, let's not split hairs. Let's just call this sideways trading, and bottom line, it needs to take out 29.43, or really this low right here, that recent reaction low, or take out the high. If it takes out that previous high, then it's undone everything that bearish engulfing candle could represent. The only thing that will not change is the divergence. All we have to do is extend these divergence lines if Amazon were to make a marginal new high. Not a new high, 15-20% beyond, but a marginal new high, slightly higher high. As long as we keep these indicators down, making lower lows, that's it. So I may be doing the same kind of video 3 weeks from now, a week from now, a month from now, talking about the divergence. And if it's not there anymore, and one by one these FAANGs burn through the divergences, then that would be trying to do check marks here, check marks for the bullish case. Alphabet is so far sort of following the way Microsoft went after earnings. It seems to be, and it was so far a top for Microsoft. We put a divergent high back here on Alphabet. They reported last night, and since that divergent high, and actually what it was is a breakdown here and a back test, 2 back tests, and we've been walking lower. Today they took out that 1479 support level that I've been talking about. Is that a sell signal? Technically yes. However, just like Microsoft, or any of them. It's only going to go down so far without the rest of those market leaders breaking down. And a lot has to do with, they are different companies, and to a large extent they're competitors of each other, but they're also it's more, this market's driven more so by money flows, by excessive liquidity the Fed's created, money coming into funds, S&P 500 index funds, ETFs like this. So you have the money flows going in, it's going to support this. When you put $1 into QQQ or $1 into SPY, that dollar gets spread out proportionately depending on the weighting to those stocks. And again, these are the big ones, so they get the bulk of that. So every dollar going into the NASDAQ 100 or the Qs is a big chunk of this. Here, I can tell you somewhere on here I had the percentages. Thought I did. Nah, I used to have that somewhere on the chart, the weightings. All right, last one, and then we'll move on. That's Facebook up today, divergent high. So, nothing's changed technically. The divergence is just extended. The only thing that changed technically is a new high right now. And again, we'll see how that holds. Back then, I think I pointed that out this morning. You can see the PPO is still in bullish territory, and it's curling back up at that line. Last time they reported, actually last time was April 29th, was last reporting date. Before that was January 29th. We had a very similar technical posture. We had a uptrend line. There was a larger, more important uptrend line, goes to the left of the chart. We had a minor uptrend line, and we had negative divergences right there. There's our divergences. They reported. Same thing. Well, actually, no, not the same thing. They went down after earnings, tried to rally back up, came at that level, and then dropped. But what is similar? Look at the posture of the PPO back then. You had the PPO up above the zero line right here. I'm going to zoom in a little tighter. It started to curl up. It looked like you were going to have a successful defense. I often say how this zero line, that dotted line right here, dashed line, that acts as a support and resistance when tested from above and below. So we were starting to curl up at this point. We came and looked like a successful test, starting to curl up, boom. So we'll be watching this. Right now, it looks like it's curling up just like then, right after earnings, and then it got rejected. So that's not a hard buy and sell signal, but I think it does a pretty good job, I've talked about it before, of identifying the overall trend when the PPO signal line, and I'm talking about the white line, the 9 EMA, when it's above the zero line, trend is bullish, and when it's below, the trend is bearish. All right, a few more items and then we'll wrap it up. Definitely wanted to update Nat Gas because those divergences are starting to play out. I was targeting the next target and it looked like we had a decent shot of hitting it. The only thing that was giving me pause were these divergences that have been building, and they have played out now so far. And I mentioned this as an objective level to place a stop below that trend line, and we broke down, we back tested, and we're moving lower. No way to spin this right now. The reversal shy of the resistance is anything but bearish, plus the breakdown right there. Support, well, you can always look at these reaction lows. But the next very decent support I have, pretty solid, is about 1745 right there. So either way, like I said, so far a reversal, and followed by, the reversal is one thing. It would have been nice to see a bounce off that level, get one last thrust up before those divergences played out. And look, maybe they will. Natural gas can be a tricky little thing, but as of now, like I said, there's I can't make a strong case to step in and buy it right here. I can add a level. There's certainly a lot of micro levels when I study the charts. I could put a level right here for sure. So if you're still in it, I wouldn't give it much more room below that. There's a reaction high. I added that level here because you had reaction from above there. You had some reactions here, reaction there, a couple reactions there. So you can see this level, is where traders have stepped in before. So we may still get that final thrust up. But one thing I know about natural gas, don't become married to it. You're going to have to pick a stop if you're still in it somewhere, and I probably wouldn't let it go much below that if you didn't already stop out when the trend line was taken out. All right, and then kind of bring it home here. The easy money at least seems to be made in these ag commodities. Sugar, I mentioned yesterday. having this resistance level with the next buy signal come there, boom, popped above it. SGG, that's one of the two ETNs, up 4.16. Cane is the other one, CANE, lagging a little behind, but the same story, a breakout nonetheless. And so sugar continues to look good, as do most of these ag commodities. Coffee just keeps going. I've told you this. I've talked about this one over and over and over. Coffee, when it wants to run, more so than a lot of these other ones, it runs. It has these what I call unidirectional rips and dips, and you catch these trends, they're pretty powerful. So anyways, there goes coffee. Took out T2, headed up to that third target, and again a potential bottoming play. One of these rips or swing trades may end up morphing into a longer term trend trade if these commodities have finally put in lasting bottoms, and that's certainly a possibility when I look at the longer term charts. The other ones that stand out, cocoa, again, this was just a beautiful and an easy entry recently. This pullback to the trend line, boom, 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 with the positive divergence. Beautiful, strong divergence, and so far we're talking matter of just a couple weeks. This one's good for about 17%. So you can trade the market, you can trade those fangs. Got to give them credit; they're holding up, but they're you're still not going anywhere. We'll pick one of the strongest ones, Apple, and what's Apple done in the last over that same period of time? Even with today, if I pick that low point right there. Well, it's up about 16%, but over the same period of time, when I go back to that NIB, that was back there in July 8th. Turn off all the lines, go to July 8th, and same story. That's FAANGs, a lot of momentum has stalled out in the tech sector. There's July 8th, there's our close, there's where we're at now, and we're up about 8%. Hey, not bad if you're in it, but again, just not my kind of stock to chase. Like I said, I'm more interested in the next correction in these, and I'm fine making money elsewhere if it's a trade I'm not comfortable with, like the FAANGs right now being long. All right, and that's about it. Oh, DBA. Wanted to mention DBA. This is, like I said, easy. I go over these ag commodities. Once I get some comments on the homepage, Randy, they trade thinly traded. I talked about that. They're going to track. You just use a limit order, split the difference between the bid and the ask, or use a IB algo order. That's Interactive Brokers has those. They call them adaptive algo orders, where it'll fish the best price for you. And if you don't have something like that with your broker, again, use a limit order, split the difference. But unlike thinly traded penny stocks, they're going to track and they're going to move up. And if you don't like ETNs and you don't like thinly traded things, then DBA, it's an ETF. And you got all of them in there. All the ag commodities I've been covering lately. That's a breakout right there, guys. That's what I wanted to point out. Big divergent low. It's been coming for a while, and there's your breakout right there. Impulsive, well above the recent trading range. Potential basing pattern here. Everything you want to see. So there's your targets. Again, I'm viewing that as more of a long-term. It's unofficial. Been highlighted so often recently. I think you've either taken it by now or you haven't. And today, again, you had really a breakout yesterday, but today's just followed through to that. And that's about it. So they're all moving up. Cal's kind of not going anywhere lately. It's probably one of the least favorite I've been highlighting because I am bullish on the grains and long the grains, and usually you're not going to see the grains and livestock rally at the same time. Sometimes they will. Wheat, same story. JJG, there's the grain ETF, and then soybeans. All of them moving up right now. And corn's still holding off, but I smell a game of catch-up coming here. Whether we have a marginal new low, put in a nice divergent low there, run the stops, or not. It doesn't need to. You have divergence right now. You have effectively equal lows here, and so trend line. First target's 1244, then the trend line, same as the last official trade, and then these targets up here. And on corn, if you are interested in that one, whether you're going to trade the ETN, which I just showed you, simple CORN, or you're a futures trader, ZC, or your corn futures, you want to watch this. I think if you want to get a kind of a jump on an objective entry there, you have this nice, decent downtrend line with positive divergence below, forming a bullish falling wedge pattern. That's positive divergence there, lower prices, higher lows on the indicator. And you had, just like you had negative divergence here at the high recently, it was a catalyst for that correction. And you're also at support. So there's two, objective entries here on corn. One right now at support, and you give it a little room, knowing these commodities, knowing this market, knowing how the algos work and market makers, all that good stuff. They like to run stops, so you give it a little bit of room, especially if you're looking at it more of a longer term swing trade with some pretty good upside potential. So again, objective long here, you may or may not get that flush out move. Either way, a pop above the trend line would be your next objective entry. So in other words, objective entry number 1 is a long at support, and objective entry 2 is on a breakout above the downtrend line. First target 30.40 and change right there. Second target about 30.49. What does that mean in percentage terms? Give you an idea. It's about 4.5 to that first target there, and if I can grab that line right there, and then about 7% to that second target. And again, this is just a 60-minute chart of ZC. When you go back out to the daily chart, then that shows me the longer term potential. You get up to that trend line, that's about that 7% run. If we get up to that T2 level there, it's about 22%. And again, go back longer term, and it looks better on the corn futures. Well, I flipped over to the weekly chart there. Let's just stick with this daily chart now. Let's just look at those near term targets. Let's look at that 7%. We start at the breakout. If the other grains are still running at the time, that's going to support the case for corn to play a game of catch up. All right, we'll wrap it up here. Oh no, want to do silver and gold real quick. You definitely want to update. Not a lot has changed, and that's why I haven't updated these in the last day or two. But here, previous bull market high in GLD. And that's right exactly so far what stopped gold cold. It hit that earlier this week, and it's stalling out there. Divergences are still in place, and so I think gold, at least for the time being, most likely will face some headwinds, probably get a correction here at the very least, maybe a little consolidation around this level. And then silver, same story, little shy of that resistance zone, about comes in around 23.83 on SLV. Again, this is a weekly chart. Longer term bullish. And it may want to power on through there. Right now you have this doji forming on the weekly, so we don't have any sell signals yet. The daily, it's kind of stalling out here. You can see that. And then, like I said, the silver miners ETF, SIL is one of those. And I went over some of my favorites recently, ASM, some others that are stalling out. A little more work to be done. Which one did we get? We had a sell signal on PAS the other day, broke down, but it's right back on the trend line. So no follow through so far. I've taken a starter position in this one, and I'm going to continue to layer in if and when we get additional, evidence of a breakdown or reversal in silver. I suspect the miners will either go first or will go quickly once we see a pretty clear turn in silver. You can see a lot of these here. What I'm looking for is not just one, but a majority of these breaking down. When you see that, when you see all these names that I've highlighted in recent weeks, like WPM, MAG broke down the other day, and it's back testing now. So you're getting early evidence here, a couple of these breaking down, but we're not seeing the kind of follow through that you like to see. And why? Well, because silver's holding up. It's just like what I started the video with about the stock market and those other things. You're not going to see Apple drop 20% if Microsoft and Alphabet and Facebook are all moving higher or holding up. It's very, very unlikely. Same thing with these silver miners. You need to see the metals turn. You need to see the currencies. Well, it'll help. Sometimes the currencies will do their own thing. Euro, US dollar, I mentioned that's at a pretty significant resistance level here. Made that brief overshoot of 118 the other day. I think I mentioned that. If I didn't, I believe I did, as a likely momentum fueled overshoot, and that's what it is. I'm talking this 118 level right there, pretty big resistance I've had on my chart for a while. We had a lot of upside momentum going into here in the euro US dollar pair, and so far a reversal. So that is if it proves to be a momentum fueled overshoot and we come back in, and to where right here, I think we come back into this uptrend line, and I have price support there as well. Should we get that, I would put extremely high odds that we're going to have a pretty decent correction in silver, gold, and again, more meat on the bone on those silver mining stocks that I highlighted. All right, we'll wrap it up here. I'll get the video out to you guys. See how today closes. I don't see anything significant happening in the charts, no matter, it would take one heck of a reversal or one heck of a rally to really change anything substantially from what I covered early in the video. So if I don't do an end of week market wrap, we'll just pick it up next week and again watch how these guys follow through. You don't always have a initial reaction or any clues following earnings the day after. Sometimes, as I showed you back a couple months ago, it can take several days or even several weeks before the stock picks its next direction. So we'll either wrap it up later today with an end of day video if I see anything that I missed in this one, or pick it up over early next week. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.